This camera. Cool. We're live. Welcome, everyone. Really excited to have Mark Weisel joining me again for round two. Mark, big welcome to you.
Back by popular demand.
Back by popular demand, absolutely. For those of you who don't know me, I'm George Glover. I'm the CEO of The Garden. We're a performance marketing agency working across sectors where people make their biggest life decisions. And I'm joined by Mark, who's involved in a range of property businesses, but Weisel Property Group being the main one.
Good to see you, mate. How you been?
Yeah, I've been really well. I was just saying off camera, plenty of stuff happening at the moment. Excited to chat about, kind of the market. Obviously, there's been a fair amount of change happening around us, but I kind of like it when it's like this because, you know, it's kind of the tough get going, as they say, and lots of opportunities tend to kind of rear their head. But how about yourself?
Well, they say the only constant in life is change. So, and then interestingly, you know, something that we really resist, you know, just at a human level, you know, is that idea of change. So I know that our audience, generally speaking here, is sort of on the more emerging side. Yeah. And arguably that's their biggest opportunity. Yeah. You know, the ability to embrace change. They're not too ingrained with, you know, bad habits. Totally. And the world's very volatile, you know, whether it's Mr. Trump blowing up something or, you know, Mr. Albanese changing the tax system overnight. These are all real things that, you know, people watching this webinar need to deal with. So hopefully out of today, with your experience and mine, we can arm people, you know, with some skills and some thought processes to help them progress in the coming months. Yeah, and like on that topic of change, like how would you kind of summarize, I suppose, what you're seeing on the front lines at the moment with regards to the commercial property market? And I'd love to hear, because I think Victoria is, you know, Victoria versus the rest of the country, it feels like it's obviously things are moving at kind of different pace. So I'd love to hear your perspective on the Victorian market and then kind of the rest of the Australian commercial property market as well. Yeah, look, I think it's, you know, it would be ignorant to sort of say that things are rosy and dandy in Victoria. Yeah. But they really haven't been for a number of years now. For sure. You know, you're not waking up into a new set of, you know, depression or anything of that nature. So again, it comes down to the skill set, you know, and the attitude, you know, in which you're bringing to what you do each day. Yeah. And without doubt, you know, whilst things can be challenging, on the same side, you can find opportunity. Yeah. You know, so, you know, taking that sort of mindset towards, well, you know, this is what's happening. If we look at the tax changes, and obviously they were federally, and I'll get back to Victoria, but, you know, the tax changes, you know, really had minimal regard for commercial property. You know, so we were able to sort of dissect really quickly that actually this could be a pretty good thing for commercial property, you know, and then starting to pivot in terms of the sort of stuff we were buying. And obviously we're sort of a buy, fix, add value mentality. Yeah. So what product do we need to be buying to fix up, and then who's our target market when we want to divest? And, you know, suddenly every SMSF, you know, is being taxed for residential but not in commercial property. So, you know, what product does the SMSF want? And there'd be a myriad of opportunities, you know, right across the spectrum. But you know, things are pretty flat. I think it's fair to acknowledge that, you know, it's not easy every Sunday night to get pepped up again for, you know, climbing the mountain again. But, you know, a lot of those things, George, are outside of, you know, our control. They're outside of the audience's control. And you sort of just got to deal with the cards that you're dealt. It feels like with regards to some of the legislation, and to your point, it felt like more tailwinds than headwinds from a commercial point of view. There's a lot of complexity. Obviously, you know, there's still a fair amount of water to go under the bridge. Still feels like there's a high degree of confusion out there for most, you know, mum and dad investors probably. How does that kind of translate in the market? Does that mean people are more engaged in like the advice? Like, have you got more people coming to you sort of earlier in the process and looking for more help from an advisory standpoint? And does that kind of play into, I guess, you know, who they're engaging and how they're engaging different stakeholders, whether it's accountants, lawyers, you know, trusted advisors? Like, how does that kind of impact the way people sort of engage with you guys as the market dynamics really shift? Yeah, it's a great question. Yeah, we've obviously got Advise Transact, which is a boutique commercial property advisory firm, part of our, you know, wider business. And it's not any busier in that space than what it has been in the last few years. Equally, we're probably dealing in that business at the more sophisticated end.
Yep.
So most properties are sort of, above 5 million, and the sort of owners of those properties are, pretty ingrained, quite knowledgeable people. So maybe that's why there's not the, the great uptick. But I think your point's really interesting in the sense that, if we're talking about real estate specifically, whether it's residential or commercial agency, there's a big connotation that you're dealing with buyers and sellers.
Yeah.
And I picked up very early in my career that there was also this other group, which I called the influencers. So who are the influencers to the buyers and who are the influencers to the sellers? If a market, is showing massive decline in clearance rates, so if we look at what's happened in residential, every second newspaper articles, the clearance rates drop.
Yeah, absolutely. Yeah.
So if you're getting up doing exactly the same thing as what you did when the clearance rates were at 80 or 90%, i.e. only dealing in your day with vendors or property owners and property buyers, well, the chances are you're probably not going to get anywhere near the results you used to.
Yeah.
Because the macro statistics will tell you that you're really pushing uphill, so to speak.
And communicating to such a small audience, really, if that's your strategy, right?
Yeah, so you've got the 10, 12 hours in a day. If you're a maniac like me, it might be 14, and probably a maniac like you, it might be 16. We won't even get on to Mike Bird. But how do you use that 10 hours? How do you use that really effectively? Is it worth seeing a couple of less vendors or a couple of less buyers and reallocating that time to the influencers? So the accountants know better than the agents and probably better than the buyers and the sellers at the moment what's going on, because they're paid to follow tax legislation.
Yep.
They were probably briefed a little bit about these changes prior to them coming in. So they've got a head start. So if you're an estate agent out there or other people that are in different varied roles, but go and see an accountant. Build a relationship with them. Talk to them. What are your clients saying? What about this scenario? What about that scenario? The same with lawyers. Go out and build that network. Now, when you leave that meeting, you're not going to get a listing and you're not going to get a sale. But what you are going to get is a deposit in a relationship. And then if you can keep up that relationship through your communication strategy, whether you've got them on a HubSpot or you've got them through an EDM or whatever it might be, your strategies, hard copy letters, whatever it is, you're going to basically be able to continue to influence that person. And they're going to remember that you took the time to go to their office or have a coffee or have a light lunch with them or whatever it might be. That's how you gain meaningful traction in the market.
Yep.
Then as the market picks up, just like we were speaking off air, you may not get rewarded for it immediately, but when the market picks up and you've done the reps, you've built that foundation, that's when your career can really take off.
Yeah, and I think in times like right now where there's a high degree of uncertainty, a lot of change happening, the opportunity to kind of educate and inform the audience, whether to your point, whether that audience is the vendor, whether it's the seller audience, or whether it's kind of the partner network, to your point, accountants, lawyers, etc. Your opportunity to really educate and have an opinion and create great content, I think, is a huge. It's a bigger advantage in a market like this because people are kind of looking at different perspectives. People are kind of thinking outside of the box. So I think the opportunity for you to build a brand and kind of double down in the same way you're talking about depositing in a relationship, like depositing in brand awareness, whether that's on LinkedIn, whether it's email marketing, whether it's going to events, whatever that looks like, I think is the time to do that is now.
Yeah. And I sort of get why it doesn't happen, you know, and I'm not sure if it's just because I'm getting really old, that I'm sort of, more inclined to try and understand why things happen the way they do. What is it about the way the brain functions? And, I'm sort of, by no means going to go down the path of, too much in the medical space. But, if you just look at the really simple reward system of the brain, which is ingrained over many years, dopamine, that feeling of excitement, that feeling of, achievement, that feels great. So, if you're sending out an EDM and it's just to sell a property, the potential for the dopamine is really high because someone writes back, I'm interested, send me the information. I'm interested, can I inspect? Suddenly you feel like, wow, this is great. I might make a sale, and you start already thinking about what your LinkedIn post is going to be, or you're going to take a photo on Instagram, and everyone's going, and I get it. It's really human. And But the concern with that is when the market conditions are not supporting from a percentage point of view, that being high percentage chance of happening, you may get that immediate dopamine, but then you're going to be left, in a state of despair.
Yeah.
So why a lot of people probably don't invest in what you just spoke about, and what I spoke about previously about those relationships and being an advisor and an educator is because it's really delayed gratification.
Yeah.
And it's not their fault. And it wasn't my fault. And I've only learned over the years. But when we look at the hard wiring of children,
yeah,
and I'm sure you've been in the case, and I certainly have been, but hopefully my wife isn't watching. And that's, you're staying at home and Teresa's out, with her friends, and the kids won't eat their broccoli and cauliflower. So, as a really good dad, I might say, well, boys, have your broccoli and cauliflower and, those ice creams in the freezer. One will be yours pretty much immediately afterwards. So the concept there is that they start eating something they don't want to, or you start doing something you don't really want to. You don't want to educate the market.
Yeah.
But if the reward's going to be there, you start to do it. The problem is when you're investing in education, advising, having meetings with people that don't make decisions but are good relationship investments, you're not going to get that immediate reward.
Yeah.
So the brain sort of says, well, if I'm not going to get that, why put in the effort?
Yeah.
And that's the thing that people have to overcome every day. And I can speak from absolute experience, whether it was CBRE, whether it's now, whether it's where I'm at in 10 years, the foundations of the structure and the model and the system won't change.
Yeah,
totally. I'm ingrained to give effort, take the emotional risk with no guarantees of any upside.
Yeah, and I think like the way I think about it has evolved and changed a lot when I think more about strategy and growth and the business. I think in those really difficult times, and business is not a straight line to success, as we know. It kind of goes up and down. I think what I've leant on is really focusing on lead indicators and kind of the effort ball. And it's like, if you're focused on, to your point, the amount of EDMs, the content, like kind of the doing the thing that you kind of is likely to have the outcome that you want, and you show up consistently and focus on, like, it's like making the 20 calls a day, or doing those things and focusing on the kind of lead indicators. That's when the kind of lag indicators of the sales and the listings and that will kind of come and follow that.
Well, interesting. I might ask you a question.
Yeah.
If I can have the
honour.
Of
course.
You're going from interviewee to interviewer here. So a lot of people watching the webinar will have aspirations of wanting to be a business owner, wanting to, run something for themselves one day. And I haven't really thought about this in our interview series, but, you're dealing with great clients. You're dealing with great companies, both private companies, public companies. What are the insights that you can share with the audience around the clients that you look at and sort of say, well, they really get it? What are their behaviors? What are their actions? What are their investments?
Yeah.
Short-term approach, longer-term approach, not so influenced by day-to-day results. What are some of your observations around those better clients?
I think probably the first thing that for me is always around kind of data and really understanding the lineage of obviously being clear on what the end objective is, whether that's a sale or, usually in property, what that looks like as sales. I think really understanding the lineage leading up to the sale and what actually are the activities that are driving that outcome, because that's how you ultimately influence kind of the outcome and get the flywheel spinning faster. So, people will measure, okay, what's the cost of me to generate a sale? They'll look at their total marketing budget and kind of divide it by the number of sales they've generated, right? But the really good ones will kind of work backwards from the sale and say, okay, well, what did it cost me to generate an appointment? What was my conversion rate from appointment to sale? What did it cost me to generate someone who said they were going to attend an appointment, and what was the conversion rate from someone who said they were going to go to an appointment and actually turned up to the appointment? And I think the ones that I see, the people who have the most high performing kind of marketing operating systems are the ones who have really clear line of visibility on all the metrics that kind of ladder up to their objectives. So I think that's probably one thing that sticks out to me. And I think they're able to kind of build a culture around those numbers so everyone's really clear in what they actually mean and what are the kind of levers they have to pull and influence. And then probably the ones who have some guardrails around risk taking, right? Because and that's probably the difference between larger, more corporate companies where sometimes it's harder to take risks. But I think
tape and that sort of thing.
I think the ones who once you're clear on the numbers, your ability to make much more calculated risks and actually try things that are outside of the box and say, yeah, well, did that actually work or it didn't? But they have the permission to actually kind of try and do something different. So yeah, those are a couple of things probably that really stick out to me.
It's interesting you use the word different. So when you say different, because I was sort of thinking about the flow-on question that I want to ask around content.
Yeah.
So obviously they create a system. They understand what your company provides them. That the really strong platform, the incredible insight, intelligence, distribution. But then are they just relying on a group like yours to create the content, or you touched on the word before, the culture around understanding the numbers and the drivers that lead to that. Then does that then potentially influence how they think about their product, how they think about their offering, how they think about the customer experience they're trying to? Because you can get a lead, that's all great, but then if it's not an authentic sort of journey for that lead, if there's holes in the product, if there's holes in the customer service, how does that all sort of culminate in, and what are the better ones doing in that space? Yeah,
and like I mentioned the word flywheel before, and it's kind of what you're talking to there, right? Where it's like, well,
you mentioned flywheel, you mentioned ladders.
Yeah,
you really got my brain sort of ticking over here.
Which is like, to your point, it's kind of these things don't happen in isolation, right? So it's like, how do you, to your point, like how do you use the feedback, whether that's in the numbers or whether that's people actually telling you and providing feedback on your strategy? How does that kind of influence, to your point, how does it influence the product? How does it influence your marketing strategy? How does it influence the way you communicate with people? So I definitely think, one, if it's measured, it's managed, and it kind of gives you the permission to actually stretch yourself and start to really push the boundaries of, how you kind of reach people and what messaging you use. So I think when I talk about people being different, I think it's kind of around, it could be they want to open up a different distribution channel. Maybe they're seeing in the data that, okay, the local Chinese are really engaged with this particular property. Okay, great. Let's look at kind of local trade press for Chinese. Let's see what impact that has, be able to measure it.
So quite granular.
And get granular in the detail. So I think, as I said, I think it starts with kind of really understanding and being able to measure, everything kind of end to end. And then that gives you the permission to be able to try things, whether it's channel, whether it's messaging, whether it's short form content, long form content, and not just doing the same thing, which is chucking a listing up on REA and hoping that everyone arrives and, you generate a whole bunch of leads off the back of it.
It prompted a funny thought in my head when you're talking about the mainland Chinese. Obviously, my previous existence with CBRE, we were sort of at the forefront of that Asian capital space. And, I'd always held a view generally in commercial property, full stop, that the whole market works in two general terms. So if someone says, how's the commercial property market? I mean, in fact, how long's a piece of string?
Yeah.
And I was able over a long period of time to really dissect and then penetrate.
Yeah.
So sort of like take a macro, identify, and then hammer right in and just keep going. And it was interesting when you said mainland Chinese, the story that popped into my head. I got called into the MD's office like at some point when I was at CBRE, and they're like, in the tea room, in the kitchenette for all the staff, you've put a safe, like a box in there with like a PIN code, like a safe almost. Right? They said, what's in there? Why have you done that? And, they were saying, you can't do that. Like, it's not your, and I was like, no, we've got to do it because, we've got these mainland Chinese people coming in to buy development sites. Most of them were like super rich, like really rich Chinese were coming. And Lewis and I sort of said, we need the right tea set, right? So we need the right tea and the right tea set. And what it made me think of was I used the word before about the authenticity of the customer journey. So the Chinese would come into CBRE head office, they'd be a billionaire or worth a couple $100 million. They would maybe previously have gone to Collier's or whoever it might have been and got a bottle of water. You're not showing them that you understand their culture. So in sales, you're really trying to establish really quickly, early rapport, early culture.
Respect, rapport,
right? Because otherwise, if they lose interest in 5 minutes, it's hard to get it back, right? So we would have like under lock and key this Chinese tea, which was like $400 for 100 grams or whatever it was. We didn't want, people from the office just bloody drinking it
down.
But the company, they didn't understand why we were doing it, but we understood. And, it was really interesting, like the difference. So you say that, an Asian buyer has Chinese heritage in some way, shape, or form. Hong Kong, Singapore, Malaysia, China, it's sort of all China and then stemming through, obviously. But the way in which you deal with people from Singapore is very different to how you deal with people from mainland China. The way you deal with people from mainland China, the north part versus the south, very different. So this is the subtleties. And these are all, I think, brilliant opportunities at the moment, especially when the market conditions are a bit slower. Like, just face it, you're not going to have a record year.
Yeah.
And it doesn't mean that you can't have a great year.
Yeah.
Because a record year is defined, categorically by, well, how many properties did you sell or how much commission did you make?
Yeah.
It's the other stuff that you can still have a great year. Pick an area, if it is commercial property and it is SMSF and you're an emerging estate agent out there, right? And you know it's hard to sell. Become an expert, right? Don't then just become an expert in your regard. Pick your 30 or 40 purchases, team up with that accounting person that you had breakfast with and say, hey, why don't we run a seminar together?
Yeah.
I'll talk about the property market. You talk about SMSF. We'll split the cost 50-50. We'll get 40 people in. You might get a few new clients. We might get a bit of credibility. And away you go. Yeah. Right. And then things start to happen from there.
And because I was going to ask you about kind of, is now the time to kind of double down on a niche? Because like I know the temptation is when the market's hard is to turn over a lot of rocks and kind of go from whether it's asset class or whether it's a type of purchaser. In your opinion, is this the time to, I suppose, try new things, or is it the time to try and be, to your point, go down the path of becoming really an expert in one or two areas, maybe, if you want to kind of hedge your bets a little bit?
In an agency
capacity? In the agency capacity, yeah.
Look, I'm a huge advocate for the niche.
Yeah.
And then, as I mentioned before, penetration.
Yeah.
I don't think that it can't be complementary. And then obviously that's what we built previously, which was a highly complementary team.
Yeah.
Whereby there are experts focused on their niche, but they're operating to a team standard. Mm-hmm. They're part of the team's culture of, how we were doing anything was how we were doing anything.
Yeah.
Right. So, and then you're embedding that across 5 or 6 different markets. Mm-hmm. We had that incredible year in 2017. 2.6 billion in sales, 91% clearance rate, 79% market share across the 5 teams.
Yeah.
Like unreal. If you look at what's happened now with CBs, they've gone back to the model that I inherited when I got there, which was a whole bunch of generalists.
Yeah.
And the problem is, time is so valuable. You might be selling a office building in Dandenong and then having to go and drive to do an inspection of a petrol station in Campbellfield.
Yeah.
Right. And you just waste so much time in the car.
Yeah.
Right. So we basically broke the barriers of how agency was done previously. We created specialists in each team. The stronger we got, the more niche that became. And there's always layers upon layers of how you can penetrate niche and still do really well. And I think if you look at the ones in the market, doing better than others, they're still operating with that model that we had at CBRE. But the temptation is be a generalist.
Yeah.
Why? Back to what we spoke about before, the dopamine.
Yeah.
I've got a pet shop in Timbuktu I want to sell. Oh yeah, great. I'll come and have a look at it. But if that pet shop in Timbuktu is not going to lead to the next listing and the next listing and the next listing, all you're doing is chasing one commission.
Yeah.
And a lot of people, Georgie, don't break it down.
No.
They don't actually look at the net position. So the fee for selling the pet shop in Timbuktu is 30K. You got a teammate. You split 50-50. Mm-hmm. Now you're at 15. You've got a 50% deal with CBs or JLL or whoever. Yeah. Now you're at effectively
7.5. Yeah.
7.5. Then you got tax.
Yeah.
So you're going to Timbuktu for $2,000, but with no guarantee that you've got the next 10. Mm-hmm. Right. So I used to kind of get shitty when, someone would bring in a property that was off core.
Interesting.
I would almost, to be honest, like there was one point where we were so strong that we were referring those properties to other firms.
Yeah.
And it was a bit of a naughty tactic, I must admit.
Yeah.
And the person very well that I was doing it to. But we were basically filling them with dog shit listings and basically keeping all the premium stuff.
Yeah, interesting.
But that was a 10-year
that's a different, And like in terms of like asset classes and like obviously like industrial's kind of been like the hero. It's been the kind of the jewel of the crown or whatever you want to call it. Is that kind of still like, give us an insight into what you're seeing with all of this change? Does that still remain the case? What else do you like when you look across the market at the moment in terms of an asset class?
Yeah.
And maybe like, do you see more new emerge? Obviously, there's a lot of talk about data centers and how that plays into industrial, for example, is kind of the hot thing right now. But what are you kind of seeing maybe other people don't see that aren't as sexy as the kind of data center story?
Well, that's an interesting. What do I see that others don't see? I would answer in a slightly different way. I won't spend too much time on it, but I see system.
Yeah.
I see organization. I see preparation, communication. In terms of asset classes, I don't think I see anything different to anyone else. I know what I want to play in, and that's not data centers because I'm not an expert.
Yeah.
So it's very easy to kind of get induced and jump on and be influenced by the media. But these data center people, they're geniuses.
Yeah.
That's like saying, like, I want to be the fastest runner in the country, and like you're 5'4" and, like slow. So they've been onto it for a long time, and you sort of think like that Malcolm Gladwell, the 10,000 hours and that outliers.
Love that.
It's like Bill Gates somehow ended up in a room when he was 12 and there was a computer there, and
it's kind of the same as Steve Jobs.
And I'm sure when you break, I'm sure when you break down all these data center people, like yes, some of them have been deliberate, but there'll be something in their life that kind of, and it was almost like their destiny a bit. So I'm not sort of data. We're really clear on what we're trying to do. We're trying to be a business that can leverage our internal skill set around being good handlers of commercial property, in the ability to de-risk, add value, manage well, be transparent, work on behalf of investors, etc. We know what's in our wheelhouse. We know what's not. What's right in our wheelhouse at the moment is anything to do with population. Yeah. So healthcare, obviously through yourmedicalproperty.com.au, which you're well aware of. That's, a really strong part of our business. Sure. The concept of neighborhood shopping centers, and obviously there'll be an announcement pretty soon about something we've done in that space. Right. My fantasy would probably be combining both of those. The ability to
precinct,
wait for a doctor that's running late, say, well, I'm not going to wait in here with a whole bunch of other sick people. I'm going to duck upstairs and do some shopping, or grab a coffee or buy bread or go to whatever it might be. And then like in terms of a roundup, the Scott Pendlebury sort of the Australian industry at the moment is retail. Yeah. There's been a massive resurgence, right from neighbourhoods right through to major, part shares in properties like Marion for 600 mil. Yeah. Retail's really hit back strong. Obviously, you've had online now settling and they're finding the balance of omni-channel retail.
Yeah, it's kind of, that's what I was about to ask. It's like, is that what has triggered that? That's your response is like finding that. It's because it felt like it was kind of all in on online. Well, that was certainly the sentiment was, and that was backed up by a lot of the large retail franchises downscaling their kind of stores. Like you saw major retailers kind of tightening up, and then the big, the ones that were booming were some of the online furniture stores. Obviously, in Kogan go really well with no kind of retail presence at all. But is that what you put it down to? You put it down to more of a balance in terms of how consumers engage with brands and kind of the retail experience itself? I
mean, there'd be many people better equipped to answer, like in depth with an education, not dropped out of uni. Hope my kids aren't watching. I finished uni and it was great, and I just don't have the certificate. I put it down, George, very simply to human nature. Yeah. All of the studies will indicate, and the big fear coming through COVID was that, people were going to suffer significant mental health issues, which we've seen. Yeah, totally. Because they became isolated and disconnected with their community. Now, I would love to say that everyone lives such an interesting life and they're so busy and that, they've got no time to go shopping, and that's why deliveries. But the reality is people like to connect with their community. People like to know their barista. And people like to go to a cafe and think about, well, who might I see? Yeah. Will I bump into Jerry or Johnny or Mary? I dropped Harvard at school this morning and he was having his photo day or something. And he's like, oh, it's great. I'm having photos with my friends.
Yeah.
And he's 4. So like he doesn't really know the world yet.
Yeah.
But that just shows you at a really pure level, people want to be with people.
Yeah.
Right. So yes, delivery of Coles, delivery of Net-a-Porter. I mean, it's at our house every second day. I'm sort of on a first name basis with all these couriers. They come in and have a chin wag.
Mate, we got a steady stream of them coming in the bottom of this office building. I can tell you that.
I've got no doubt, you know, but you know, like, so there's a balance there, and the efficiency of delivery sometimes is good, but the mainstay of bricks and mortar, physical premises, connecting with humans, you know, wanting to speak to the pharmacist, you know, like not just ordering it online, wanting to have a conversation to get a surety that, hey, actually this bump or whatever, it's actually not a big deal, right? And, you know, so there's a whole culmination of those factors, and it's also the retailers themselves finding out what the balance is, because you know, like, is the best solution for them to move to full dark stores with with robotic trucks that you know have no drivers and deliver something to your house, or is part of their brand the experience? You know, and I think everyone's just sort of, you know, found their flow.
Because there was a lot of chat about like just like refurbishments and like converting different asset classes into, whether it was office buildings into residential, whether it was retail into office. Like, is that sort of, I mean, that's always kind of happening in the market to some degree.
Yeah.
But is there less of that happening at the moment? Or, I mean, we obviously are scarce when it comes to land. If you're kind of looking at in a ring, are you still seeing a bit of that, or is that less, more?
Well, you know, the big connotation was, what do you do with these vacant CBD office buildings? And it would be great, you know, if anybody in the audience, actually, we've got a Monash intern at the moment, and I think there's a LinkedIn post going out soon. He's a Rubik's Cube champion. Okay. Anyway, so we put him to the test and we threw him the Rubik's Cube yesterday, and he literally did it on video in like 19 seconds. Wow. So I was putting out a post saying, like, this kid's a gun. We've now asked him to solve, you know, how to fix all these vacant buildings in the CBD. See if he's so it's a bit of a gag, but you know, I'm sure that there's some pretty smart young people, you know, tuned into this you know, highly popular webinar series that we're creating here, George. If they've got the answers, I think that, you know, it's really interesting. I mean, people are trying to work out what's going to happen with these buildings. Are they going to be residential? To date, we haven't seen one conversion. Right. Not one. So architects came out, engineers came out, all the geniuses came out with these concepts. Nothing's happening. Just
the cost doesn't stack, right?
Yeah, so what do they become? Is it more education? I mean, that's something we should be, you know, really honing in on. You know, like converting some of these buildings to education facilities. Maybe they're quasi student accom and education and retail and healthcare, mixed use. But, you know, the costs are really preventative. The big builds hurt a lot. You know, there's not enough labour for our industry. That's why everything's so expensive. We won't go down a political route. Everyone knows it. But, you know, there's still a lot of water to go under the bridge. But there's always going to be smart people that are looking for opportunities, you know, like conversion of industrial facilities into self-storage. Yeah, but they're more the kind of outliers than the mainstream, you know, and it's the mainstream concepts that puts the food on everyone's table. So you're always going to get these outliers, these kind of one-off kind of people that have this idea, and it's difficult to kind of benchmark that against what the mainstream is. And I think at the moment, the mainstream's still struggling to come up with the solutions.
And do you think, like, as potentially more like, you know, call them mum and dad investors turn away from residential towards commercial, are we likely to see more like syndication of funds? And because it's like, you know, people want to participate in large deals. Is that, do you see opportunities and more of that happening as a result of the recent, you know, tax changes and stuff?
You know, when we started this series, I said George's marketing, socials, digital. Yeah, they really sort of, you know, pigeonholed you, you know. and I say that because you've got your finger totally on the pulse. There was an article this morning in a very highly populated or followed investor journal, and the article was authored by Julian Biggins from MA Financial, who brilliant organisation. Like what they've done in 20 years, 50 is amazing. Julian's a gun. He's a joint CEO. But he was talking about exactly what you just said, that private investment into managed vehicles in commercial property, all of their data, all of their indicators are saying this is going to be the next big push. And he was talking about how all of them are valuing income over capital growth because of the tax regimes. So I think that's why you're starting to see the Latrobe Financials, for example, pivot now into more asset management in commercial property. They're pooling their investors. I think they've got something like 500,000 investors, under that Latrobe Financial banner.
Wow.
Lots of it was originally for lending money out to residential development, but now they're starting to convert those investors over into direct investors into managed funds. So I think there'll be that. I think there'll be a bit more of a awareness around commercial property investment. You've got some great groups, like one out of Queensland in particular, one out of Sydney, not so prolific, but that are doing a lot of buyer advocacy. So they're starting to influence smaller investors, sub 5 mil, about why do you need to buy another house?
Yeah.
Right? Like there's always been this connotation that houses are safer, but you accept 3%. Well, a doctor's clinic's pretty safe if you're getting 6. Yeah. Right? And the property's going up in value.
I assume a fast food joint probably goes pretty hard if you're getting...
Well, the doctors need the fast food because the fast food's the start of the problem, and then the doctors go and fix it. Here, but look, there's it's evolutionary. It's always moving. That's the exciting part. Yeah, that was the best part of my journey in agency. Say, well, I understand that person's a gun and has been for, but I actually don't like how they do things. They don't innovate. They don't change. And I was saying to someone in my team, I think a couple of the industrial, but I said, guys, there's no rules. Just because other people have done it like this for 10, 15 years doesn't mean that you can't write a document in that way, or as long as you stay within the rules of legislation, there's no rules or boundaries around creativity and innovation. And that is the big opportunity for anyone watching the webinar. And you'd like to think if you are watching the webinar, it's because you are thinking that you've got more to give. You can achieve, but you've just got to have the courage to take that next step and start trialing it. I mean, and we're from the Vic market. My dad's a wonderful man, not incredibly, not a big mogul in business or anything, but incredible street sense. Yeah. Whenever I've got a new idea, even till today, and I'm 43 now, I'll just ring him for a sense check. Yeah. Dad, I was thinking this. What do you reckon? He'd be like, oh, Mark, no, that's shit. I don't know. Or Mark, that's a ripper. So then just, who do the people on the webinar have in their life that they can just do a bit of a sense check with? Totally. Right? And that keep coming up with those ideas and don't give up.
Yeah, love it. Well, Corbin's waving me off, telling me we're kind of running out of time here. Conscious we haven't got to questions today.
About Corbin, I come here, bring him a cookie from downstairs, and now he's trying to, there you go, there's the cookie. For anyone wondering, it was a walnut chocolate brownie cookie. And now he's kicking us off just as we're getting started.
Yeah, well, I appreciate that we are a little bit over on time, but for anyone who has questions, I know Mark's very generous with his time, so you can definitely reach out to him on LinkedIn, myself also. But yeah, hopefully people have got a lot out of this conversation. I've certainly always enjoy having a conversation with you, but great to get a pulse check on how people should be thinking, the mindset, and kind of more than just what's happening at a macro level, but how, some real practical things that people can do, and what is, what the reality that we're facing, the market that we're in. So no, I've really enjoyed the conversation today, Mark, and thank you again for joining us.
Yeah, no, well, I'm enjoying the conversations. We look forward to the next one. And also very importantly, we're loving the relationship that we're building with your team. Yeah. There's a great buzz in here in Abbotsford. And for anyone out there wondering what you guys do, they should certainly catch up with someone in your team for a coffee because, collectively we're achieving some great things. So it's a pleasure
appreciate
to be
that.
here.
And likewise, love the partnership and working with you and Darcy and the rest of the crew as well.
Beautiful.
Awesome. Cheers, Mark. Thanks,
Cheers.
mate.
Bye-bye.